Liam. Thanks everyone for being here. Thanks to Resource Stocks for inviting me along to talk again. Now look, in your program it says that I was talking about battery minerals and metals, but there's a bit of confusion over that because the guys at CRU do it a hell of a lot better than I do. But and you probably know that I have a passion for gold, but you've got to understand that gold's only a subset of the passion for metals and mining and oil and gas and so on. Anyway, Martin Place Securities, I've been around a long time, I know a lot, and I'm always sort of looking forward. And as I said yesterday, I've got my strategies which I haven't had to change over the last 5 or 6 years. I haven't got anything that wrong. The $8's been a bit softer than I would have liked, but for the most part, gold prices up, commodity prices are looking pretty good, and iron ore looks very, very exciting to me. So this is a commodity outlook, and I like to think longer term, and I talk about a decade of opportunity. This bull market has got at least a decade to run from here. I'm not concerned about the end of the world, the US stock market crashing, China dying, anything like that sort of stuff that people talk about. I think they've got it all wrong. They had it wrong for a long time, and they're going to continue to be wrong because they're looking at the wrong things. So a disclaimer saying that it's not really relevant here, but I'm a stockbroker. Now, the real story behind all this is population and demographics and where the world is going. And I've sort of put this together in my model, which I call the Dawes Points Global Boom, and I've trademarked it. And I have, as I say, I haven't had to change this for quite some years since I actually put it out on the 30th of November in 2008 when I actually presented at Mines and Money and said, look, this is what's happening in the world, guys, and this is the low, and it just so happens that it was a low the week before. And of course it didn't happen quite the way I thought it was going to happen, but certainly stocks were damn cheap then, particularly gold stocks. But really the whole story is population growth. And what we've got here are some really interesting numbers. Look, Asia, 4.6 billion people. There'll be another 330 million people by 2030. Africa, there'll be another 250 million people. Europe, static, US growing, and well, Oceania, well, we don't really count in the whole thing, but the whole story really is Asia growing and Europe not doing anything. And this is very exciting for people who are on the right side of the market. Now, this is my resource pattern. Now, who here knows anything about Elliott wave? Elliott wave theory? 1, 2, 3. Oh, a few people, 4 people. Elliott wave, and this is all about market sentiment, and it's really fascinating. Now, sorry. It's really fascinating. 1987 crash was the start of a major depression in the resource sector. Now, in the 30s, we had a 30 to 40% of the workforce was involved in primary industry, mining, forestry, etc., etc. But by the time we got to the 80s, it was about 3 or 4%. So while it was horrible in the 30s when commodity prices fell because of slow economics and so on, during the 80s and 90s, the rest of the world, the rest of the 96, 97% jumped up and down because commodity prices were cheap. But we went through our depression, and we really only emerged out of that in about 2003. But importantly, the markets bottomed in December quarter of 1998, and we had this first leg of our bull market, which is wave 1. And that's the disbelief rally. Everyone doesn't believe it, told you so, it's going down, and so on. Now, I did 35 IPOs in this period here, and almost all of it was done through my clients, 1 or 2 institutions, next to no institutional interest, and no interest from the public, which is really, really important. So it was a rally, it was a fabulous rally, but it was disbelief. We went to pessimism. We had our rally into 2011, hope, and then despair. Now, we're on wave 3. So that's 1, 2, here we're on 3. And this is really, really significant. We're here, we've got a bull market which is going to last at least 10 years, and I think it's going to be a lot longer than that. So I'm a bull. And let's look at all this stuff. Now, if we look at all commodities, it's amazing how over time they tend to perform much the same as each other. Now, this is the big four. I had the big three, which was copper, iron ore, and oil in the form of Brent, and I've added gold to it. But just note really how they all perform roughly the same. It's important to understand all that. Some things outperform others at different stages, but we've got things that are moving the same, and we're just indexed it back to 2000 just as a number. But note that the gold price made new highs in 2011 and the iron ore price made new highs in 2011 and nothing else did. Now, iron ore and gold are leading this. Now, I said in 2016 we would see a new high in iron ore price when everyone else was telling me it was going to go through the floor. So there's my one. This is my ABC rally. We're on to complete 2, and now we're on 3, and we're going to see much, much higher iron ore prices, much higher gold prices, much, much higher copper and oil. So supply side things, they're the things we really need to focus on. High mine capacity utilization, relatively few new major projects, lots of old mines, declining ore grades, rising costs. And it was really interesting to listen to Jake talking about how they're looking at comminution and ore sorting and removing those costs out of the systems. And we've got labour issues and geopolitical risks coming everywhere. So they're endemic right across the whole commodity sector. Within copper, it's really interesting to see just how all this stuff fits together. We've got mine production in the Americas and Africa. We've got the refined production is all in East Asia. And we're getting predominantly copper, porphyry copper deposits. Now that's really important as we go through, particularly in Australia and particularly in New South Wales, as I hope we'll have time to talk about. And the global market is mostly concentrates. It's not copper metal, it's basically concentrates out of Americas, Africa, Australia into the smelters in China. And the supply side is going to be critical for the next decade in copper. It's interesting, this shows it pretty well. This is Chile, so big mine producer. It doesn't produce much metal. Peru concentrates. China, not much concentrates. Lots of intermediate products and lots of refined metals. And we come across to Australia, mostly exporting concentrates. So it's important to understand the makeup of the market, and when we do that, we have a better understanding of where things are going. Treatment charges for concentrates have been falling because basically there's a real shortage developing. A lot of these mines are old. Look when some of these things were discovered. So we've got real issues as we go through in terms of new supply while the growth rates are going. Our head grades are declining. Now that's not just because the mines are running out. It's just that new mines are coming through which have got much, much lower grades in them, and we need to have large volume operations to get the amount of copper we need, and hence the grade is falling. Long-term consumption, this is growing at 3.35%, and I think you've heard people say recently, over the past 20 years we've consumed more, or produced more copper than we did for the previous 100 years, and for the next 20 years we're going to consume more than we've done for the 120 years prior to today. So the demand for copper is really strong. So Asia, the consumption is, Asia is about 65%, and we're getting electrification. This is really interesting in terms of energy consumption and whatever, but copper is really, really important right throughout this. Electric motors and electric vehicles and so on, just copper is just becoming everywhere, and it's able to maintain that 3.5% growth rate. In terms of consumption, most of it's China, really important to understand that, and we're looking at significant deficits as we go forward for copper, but we can say this for almost all the metals. We just do not have enough capacity, and we don't have enough inventory of undeveloped things. Electric vehicles, whatever happens in that, we've got a lot more stuff to go. Now, in terms of steel, this is really, really important. I've been following steel, and I've been really, as I say, bullish on the iron ore market, bullish on China, but just note that whilst China is over 1 billion tonnes of annualised crude steel production, India has come in at 114 million tonnes with the latest numbers. Now that makes it number 2. They want to be 300 million tonnes by 2030, and they've just become an importer of iron ore. Where are they going to get 200 million tonnes of the iron ore for 200 million tonnes of crude steel? I don't know. It's going to come from Africa, but it's not an issue of Brazilian capacity being on or off, it's demand. Now, MENA snuck in as 50 million tonnes of production of iron, particularly as far as DRI. Vietnam, 21 million tonnes. Vietnam was nothing 10 years ago, and China wants to put 42 million tonnes of capacity in ASEAN. So the market for other places outside of China is growing, and magnetite is really growing very, very well in all that. The magnetite projects that we've got through, coming through over the next few years will be really, really important. I'm running out of time, I'm talking too much. China, look at this, it got up to 1,065 million tonnes annualised. The US, I don't know why Mr. Trump wants tariff for steel production, because we've seen next to nothing in terms of their growth over the last year or so with the tariffs there, and they're about 8 or 9% of what China produces. It's more important to note what India's done over the last few years on a monthly basis. It's just pulling away from Japan, and South Korea is still growing. As I said, India, look at this growth in pig iron and DRI as opposed to crude steel. It just shows you how quickly that's growing. If we look at MENA, look at this, nearly 50 million tonnes, tremendous growth. And now I'd like to talk about energy. Now, all these things are telling me the same thing. The demand out of Asia is sucking up everything in terms of raw material. Non-OECD energy consumption is now 59% of total world energy. And now what this means is it's growing about 2.5%. OECD has been doing next to nothing, but let's say it's 1%. What it means is, because the non-OECD is now 59%, energy consumption is accelerating. So overall energy is growing rapidly. Renewables are tiny, absolutely tiny. Electrification is increasing everywhere, which is really good for copper yet again. So, energy, look at this. This is what non-OECD is doing, and OECD has done nothing for a decade, reflecting efficiency and anemic economies, but basically energy consumption is on the rise. This is a really important chart to see. I'm sorry you're only going to see it for about 20 seconds, but it's energy consumption by fuel type, and it looks at where things were in 2004 and where they were in 2017. So China still has a huge amount of coal, India a huge amount of coal, Australia still a big amount of coal, and the US. This is their nuclear, and look at renewables, it's just tiny. How AOC and a new Green Deal ever got past kindergarten, I do not know. It's just absurd. This is this electrification, which again is very, very important for copper. But it's important to look at these aggregate numbers for energy consumption, because it tells you where the world economy is and tells you something of the politics. Now, I want to finish with talking about copper in Australia. We've got some really, really exciting things. In Macquarie, I mentioned yesterday about the Macquarie Arc and the porphyries that are under exploration that's underway. We saw Alkane give something really interesting just last week, and we've seen Staveley. So that's really, really important. It's all part of this sort of Lachlan geotechnical area. In South Australia, we've got this magnetotelluric targets. We've got a lot of action in the Patterson Ranges and the Yilgarn for copper, Cloncurry, but 68% of Australia is still undercover, so we're going to see a lot of activity in terms of remote sensing and with focus on copper. Iron ore, Pilbara, growing things and opportunities there, but it's the South Australian magnetite provinces that are going to give us the growth. And energy in Australia, well, it's everywhere. Offshore LNG growth, onshore gas, get the politicians out of it, and we'll see a lot of fun happening. And I've got uranium, and there's my time finished. So commodity outlook, robust. Why? That's what the numbers tell us. None of this OECD, or IMF, 1%, 2%, rubbish, tons, growth rates in the fundamental things, and that's what's going to drive our currency and the gold price, better living standards, better equity markets, and lots of good fun. Thank you very kindly.
Biggest wave? Is it the third
and the third wave, yeah, and we've still got the fifth wave, which is probably beyond my mortal existence. But thank you very much.
Thanks so much, Barry.